This is CGTN, China Global Television Network.
Hello there, welcome to this edition of Global Business Africa. In the course of the hour, we'll run through the business news stories you need to know about from the continent and beyond. But first, a quick run through the markets for you. Indices at the JSE did close a little lower today. This is for the third session in a row, dragged a bit lower by the market behemoth Naspers. It did close 1.1% lower, but that barely dents its nearly 33% rise so far this year, and that shows absolutely no signs of slowing down. In East Africa, Safaricom closed nearly 1.7% higher, 33 shillings 85 cents on the day. It announced that it was trimming the cost of peer-to-peer transactions on its network by around 40% or so in some cases. Here's what's coming up tonight. South Africa's tourism industry is expected to take a bit of a hit as the government is tightening pandemic restrictions. Kenya's tea sector is headed for a major overhaul after legislators adopt a law designed to give farmers higher earnings. And the European Commission is recommending a UK travel ban. The details on that coming up shortly. Our starting point tonight, however, is in South Africa. The tourism sector in that country is trying to make the most of this holiday season, but a second wave of COVID-19 infections has made that a lot more difficult. President Cyril Ramaphosa announced much tighter restrictions last week to curb the spread of the virus. That move, however, has been opposed by various interest groups and businesses, which fear they could collapse due to these latest regulations. CGTN's Sumitra Naidu starts us off tonight.
South Africa is a populous tourist destination, boasting picturesque mountains, lush forests and blue flag beaches. While it's hot and sunny for most of the year, December is most popular amongst both local and international tourists who flock to the country's coastlines. However, many of these beaches will be closed to the public this year.
In the areas with the highest rate of infection, beaches will be closed for the duration of the festive season from the 16th of December to the 3rd of January. This will apply specifically to all of the Eastern Cape, as well as the Garden Route district in the Western Cape.
With daily infection rates rising by over 10,000 this week, the COVID Command Council has agreed to impose tighter restrictions in hotspot regions. The curfew is now from 10 to 4 a.m. All restaurants and bars catering to holiday makers will have to close early.
It will impact tourism. That's 100% I'm sure about that. On the basis that many people travel to the coastal areas of our country are going there for beach purposes or water sports purposes. We started to see this in the Garden Route area. We saw this again in the KZN area, where some people just decided that they won't go on holiday.
South Africa is open for tourism. Almost all travel bans have been lifted, except for certain restrictions on a few public beaches. But it's going to take a long time before the tourists get back to pre-pandemic levels, especially with many people too afraid to leave home and others reluctant to spend.
Tourism contributes over $28 billion to South Africa's GDP. The sector is also an important employer, accounting for over 1.5 million jobs. It's the one sector of the economy that has recorded consistent growth.
I have 22 staff members. We have concerns about how we're going to do this a second time, how we're going to save our staff. I think we'll be lucky to do 35% of what we normally would do in December time. The curfew really strikes at the peak of the nightlife, which is understandable, to be honest.
While growth is still expected, a strong rebound may take longer than anticipated. Sumitra Naidu, CGTN, Johannesburg, South Africa.
In North Africa, Egypt's abroad sent back over $22 billion home in remittances, and that's just between January and September this year. On a year-on-year basis, that's an increase of nearly 12%. Now, the rise in remittances was recorded despite the COVID-19 pandemic, which has slowed down most economies around the world. Here's CGTN's Yasser Hakim explaining the role that remittances have played in stabilizing Egypt's economy.
Remittances have become one of the major sources of hard currency for Egypt, which also relies on tourism, exports and Suez Canal revenues to fund its budget. But unlike other sources which have dipped this year, remittances have bucked the trend amidst the COVID-19 pandemic and rose by 11.6%, according to data from the Central Bank of Egypt.
The optimistic outlook with the reopening of the economies after the first wave of the pandemic led expatriates to increase their transfers in the second quarter of the year to exceed 20% year on year. Some who fear to lose their jobs in the recession-hit countries have also transferred their savings as a precaution.
Ahmed Abu Zaid is an accountant who receives money from his parents living abroad. He says transfers have not been interrupted this year despite the outbreak of COVID-19.
I feel it is related to the coronavirus. The transfers continued because there are many Egyptians working abroad like my family, and they still send their money for commitments here. The situation is the same and money is still coming to relatives in Egypt for their daily expenses.
Others in the diaspora have also been sending money to buy assets or invest in projects back home.
The economy is indirectly benefiting from these remittances as they are cash inflow of hard currency. The higher supply of hard currency in the market improves the Egyptian pound exchange rate. This in turn stabilizes prices and strengthens the economy.
Remittances have been rising since Egypt liberalized its currency exchange rate 4 years ago. As part of the IMF link, this has played an important role in stabilizing the North African state's economy, with inflows adding to the foreign currency reserves, which is now recovering after losing about 22% during the coronavirus outbreak. Yasser Hakim for CGTN, Cairo.
On to West Africa now, where Nigerian senators approved the 2021 budget, but it raised the spending ceiling by $1.3 billion. Now, this is predicated on an oil benchmark rate of at least $40 a barrel in 2021. Lawmakers over there put the daily oil production assumption at 1.8 million barrels a day. The government said that the 2021 budget is aimed at accelerating the pace of economic recovery and to promote the diversification of the economy, especially following the downturn and the recession, really, caused by the COVID-19 induced fallout. A plunge in oil prices earlier this year magnified the headwinds that the West African economy is running into. Nigeria's Ramah Nyang does rely very heavily on crude oil sales for government revenues. The problems triggered a decline in growth and large financing needs, as well as a weakening in its currency, the Naira. Let's explore that in a bit more detail. Deji Badmus is live in Lagos with more details on this story. So, Deji, part of the near $13 billion deficit for this particular budget will be funded by about $500 million, which, at least according to the October estimates, would be raised through privatization proceeds. What assets will be sold to raise that cash, and when is that likely to happen?
Now, when is that likely to happen, Rama? It's something that is difficult to tell. We might probably see it next year if everything goes according to plan. But of course, I don't think the federal government would have it that easy. I'm talking about the executive now, because I think we're going to see opposition, and we're big now from Parliament. For instance, Parliament has come out to say it is not aware that the federal government, that's the executive now, plans to sell off or concession some of the national assets. And let me mention some of these national assets, since you want to know. We're talking about assets now in the power sector. The government is planning to sell off about 3 or 4 of its integrated power plants in the power sector. You also have the National Stadium here in Lagos that the government is planning to either sell on concession. There's also the National Theatre. It's a very huge edifice that's been wasting for a very long time now. Of course, the government thinks it can make a lot of money if it concessions or sells that off. And we also have the National Stadium in Abuja as well. And there are quite a number of them. You have the Jos International Stadium as well. And then you have some airports that the federal government is actually planning to concession. But then, Rama, as I said, some of this projects, so I don't know how to put it now, some of these some of these assets that I've actually mentioned are still bogged down in controversy because you have a situation where, for instance, in the aviation sector, the aviation unions are refusing to accept any form of concessioning. The Senate is saying it is not aware that the federal government plans to privatize some of these assets. So all of those areas will need to be, worked out, and there needs to be some kind of agreement before the government can actually go ahead to either sell or concession them. So it's difficult to put a timeline to it, but the government hopes to achieve that by next year so that it's able to use the money now to fund part of the budget, as you have mentioned.
Back in October as well, looking at the presentation that the finance minister made as well, one of the key budget assumptions that were made in her presentation was that the dollar-naira rate would essentially remain roughly stable, 379 naira to the dollar, all the way up to 2023. Could you walk us through why the Finance Ministry is assuming that the CBN can hold on to that peg despite all the economic damage it's done, arguably indefinitely?
Well, look, when the Minister of Finance actually made that statement, Rama, that was a while ago. That was even before the central bank actually devalued the naira. As you know, we had another round of devaluation just a couple of weeks ago. And the naira, of course, is officially trading at 390 naira to the dollar. I mean, the CBN actually asked BDCs and even the banks now to sell at 390 naira. So I think we might see some kind of adjustments with time, maybe after the budget is passed. The National Assembly members are probably not aware of it, but the minister's remark, of course, is not tenable because that figure is actually is actually off the mark, if you like, because what we have, that's the official market rate now, and of course is far higher than the 379. So I don't see how that can stand. So I think there would be some kind of adjustment with time because there's a possibility that after the budget is passed, we might still have some kind of a going forward, maybe sometime next year.
Indeed, we'll see how that does play out because that currency story is always vaulted from one end of the yardstick to the other. One last question for you, Deji. Is the president largely in sync with the changes that the legislators have made? Senators, for instance, increases spending outlay here by at least $1.3 billion. Is he in sync with that, or is he likely to demand that changes be made to this spending outlay before he approves it?
Well, I don't think we're going to see that. I think the presidency is actually in sync. The executive is actually in sync. The Minister of Finance actually alluded to that about a week ago. The executive is actually being carried along by the legislature. You have a friendly legislature at this time that is working hand in hand with the presidency. So I don't think we're going to see any major changes at all. I think the president is going to actually give his assent to this budget as passed by the National Assembly. If there's going to be any change at all, I don't think it's going to be anything major. Probably some adjustments, like for instance, the exchange rate that we talked about that is pegged at 379. We might see a change since the CBN has actually devalued the naira now. But other than that, and probably maybe one or two environments, I don't think we're going to see any kind of major change at all because certainly based on what the Minister of Finance said, the presidency, the executive was carried along in the entire process. Rama?
Indeed. We'll leave it there for the time being. Deji Badmus there live in Lagos. Time now for a run through some company headlines. Let's start in the world of cement. Africa's largest cement producer, Dangote Cement, is planning a buyback of the company shares next week in order to boost shareholder value. The company will repurchase as much as 10% of the issued capital, starting with the first tranche of about 85.2 million shares. The purchase will be done in the open market on the 30th of December, and it will end the day after when the entire target number of shares are repurchased, whichever one of those two is hit first. Dangote Cement is the first Nigerian company to undertake that exercise. Africa-focused energy firm Kibo Energy has signed an agreement to secure coal supplies from the Miner Valley for its Benga power plant in Mozambique. The term sheet sets out basic terms and conditions. Kibo says it will be converted into a definitive coal supply agreement when a power purchase agreement is finalized with Mozambique's state-owned power utility. In the world of telecommunications, Vodafone has offered to buy out the remaining minority shares in Kabel Deutschland Holding in a deal worth $2.6 billion. The deal will see the telecommunications firm end a lengthy legal battle over its 2013 takeover of the German firm. As part of the agreement, Vodafone will give minority shareholders, including Elliott Management, $125 for every share. Vodafone says the deal has been accepted by shareholders representing at least 17.1% of shares. And finally, in the pharmaceutical world, Pfizer and Moderna are testing their COVID-19 vaccines to see if they work against the mutated version of the virus found in the United Kingdom and other countries. The discovery of this new strain sowed new panic in a pandemic that has claimed almost 1.7 million lives so far worldwide. This strain is referred to by some experts as the B117 lineage. It's not the first new variant of this pandemic virus to emerge, but it's said to be up to 70% more transmissible than the original the virus. That's a run through your company headlines. You're watching Global Business Africa. Plenty more content in the pipeline, including this. Kenya's tea sector is headed for major overhaul after legislators adopt a law to give farmers a much higher cut of earnings. And the European Commission is recommending a UK travel ban. We'll have the details next. There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN. See the difference. Africa is the nexus of enterprise, and global business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Welcome back to the program. Now, late on Monday, Kenyan legislators approved a law that aims to give farmers a much bigger cut of earnings from tea. Kenya, of course, is the third largest producer of that beverage in the world after China and India, but earnings due to farmers have been in decline for years. Consider this, for instance. In the year to September, the volume of tea sold at the auction rose by nearly a third, and that's despite all the disruption caused by the pandemic. But a kilogram of tea was changing hands at just over $2. That's representing a near 17% decline in price compared to last year. Compared to 2012's average price for the entire year, tea prices are down by nearly 40%. Now, as approved by legislators, the bill aims to provide prompt payment to farmers. If it does get assent from the head of state, the bill will outlaw the sale of tea by private treaty. All tea sales, regardless of where it comes from, be it a small-scale farmer in Limuru or a large multinational somewhere in Western Kenya, all that tea has to be sold at auction. The bill also places firm timelines by which farmers must be paid, and it makes provisions for a guaranteed minimum return to farmers, even though the precise mechanisms on how that will work are yet to be finalized. Now, a few hours ago, I spoke to the chair of the Kenya Tea Sector Lobby Group, Irungu Nyakera. He and others have been pushing for these reforms for years. I started by asking him why the current system was, as he saw it, benefiting everyone else except the farmer.
They've not been doing the marketing to try get additional markets to sell Kenyan tea. They've been very comfortable with the market that currently Kenya has. Between Pakistan and Egypt, Kenya sells 55% of its tea. Very risky, but also a market that has not shifted because KTDA has not been interested to change that. Two, the auction, about 20% of the tea is sold outside auction, meaning that whereas we would have expected to have the auction lead to real price discovery, we have brokers within the auction manipulate the prices and depress them so that this low price is the one that is then used by KTDA to sell through direct treaty or direct sales with the 20% that is not sold through auction.
Just to be clear, though, that 20% that you're referring to, legally speaking, was that illegal?
The 20%?
Yes.
No, it wasn't.
So this essentially was just one big loophole that was being exploited to essentially drive prices down.
Exactly. It was not illegal. It was a loophole. And that's why in the tea bill, it has outlawed direct sales so that all the tea, be it from multinationals, private tea factories, KTDA, all of it goes through auction. And then we can have real price discovery.
One of the other things that I noticed in the bill is that it also aims to deal with the problem of a lack of prompt payment, which is, generally speaking, a wider problem across the entire economy. But in this specific instance, it says that farmers need to be paid within 14 days of the tea being sold at auction, and at least 50% of whatever money the factory ends up making is, by law, gated off specifically for farmers.
You know, Rama, what happens, what has been happening is that KTDA, through their own structures, have been engaging with buyers on the direct sales. And those buyers, some of them take our tea and are even given 6 months credit to go buy, sell our tea, do anything else they want with our money, pay back in 6 months. Yeah. So those are the things that were being addressed now. It's saying everything has to go through auction, and once any buyer, once they buy within 14 days, they need to have paid to the factory. They're not paying to KTDA. They are paying to the factory where they bought the tea, and then that factory, within 30 days, when it's paying the farmers their monthly amounts, it pays out 50% of its earnings on that month to the farmers.
Let's look back to that guaranteed returns question, because you mentioned that at some point an element of public subsidies might be required in order to essentially meet that payment out to farmers, assuming market prices do fluctuate. What's the estimate for how much that might cost taxpayers, and what's the floor price that we're looking at that will then trigger the entry of public subsidies?
Actually, Rama, that won't be possible to answer today because the mechanisms of actually how this the GMR will look like has not been fixed yet. What the Act now, once it's signed, envisions is that a mechanism will be put in place that will become the guaranteed minimum return. So there are different options of how this will be structured. So I would expect once this is signed, then a team will be set up to actually come up with what it should look like. But obviously, the expectation from where I sit is that there'll be as little as of government subsidy as possible, because then this will see if there is a subsidy on it, then of course it will trigger other players within the other crops, be it maize, be it coffee, be it pyrethrum, all of them to seek similar solutions from government.
And the fact is that at this point in time, our public finance situation is pretty limited. We've got very limited fiscal headroom. So this, strictly speaking, might not necessarily be affordable.
No, it's not. It's not affordable.
Okay.
And that's why you'll find that the tea bill brings back certain levies that had been removed.
Now on to Somalia. Business is gaining momentum months after the federal government over there lifted COVID-19 restrictions. Privately owned businesses were hardest hit by this pandemic. Many of them were forced to shut down. Here's CGTN's Abdulaziz Bilina reporting from Mogadishu on how SMEs managed to survive the worst of the pandemic.
Iqra Abdi Hashi is restocking her store after receiving a shipment of clothes, shoes and bags from abroad. Hashi deals in women's wear, importing her products mainly from the Middle East and Asia. At her store in Mogadishu, business is slowly booming after months of uncertainty. Hashi is among thousands of traders whose import businesses have been hardest hit by the coronavirus pandemic.
The effects have been wide-ranging. The first 3 months was the worst in terms of trade and imports. I was even unable to return to the country after flying out on a business trip to purchase more goods for my shop.
In March, the Somali government imposed a ban on all passenger and cargo flights as part of measures to limit the spread of the virus, with the exception of humanitarian flights. For Hashi and other small, medium-sized enterprises, accessing the global market and delivery of goods was the biggest challenge.
I was unable to get cargo services, and in case we got a flight, cargo service was not offered at the old rate we were accustomed to. Basically, we had to pay more for the normal services. This was bad for business.
Amina Salat is one of Hashi's clients. She has come to check on some of the latest arrivals. The pandemic affected her graduation and that of her friends after Hashi failed to deliver their order due to lack of cargo services.
During the first early months of the pandemic, we were unable to buy designer clothes from this shop, and it was our graduation. We placed an order of a set of new clothes of the same type, but it wasn't possible to get them. COVID-19 ruined our graduation plans.
In October, the World Bank said Somalia's economy is expected to shrink by 2.5% this year, revising its initial forecast of 3.2% growth due to the impact of the coronavirus crisis. Abdurrahman Duale Bayle is Somalia's finance minister. He says the pandemic affected domestic revenue, with growth expected to rebound to 2.9% next year and 3.2% in 2022.
The pandemic hit us less than we expected. In the beginning, we all thought that the revenue will decline by 40%. We now see that it was much better than we expected. Maybe 10 to 15% decline. That's how much it has affected.
Somalia's private sector has slowly risen and has now become a key driver of the economy, employing thousands of jobs and creating conditions for future generations of entrepreneurs to flourish. Across the country, many young people, including recent university graduates, are creating startup companies with leading banks providing financial assistance. Abdulaziz Bilon, CGTN, Mogadishu, Somalia.
Now, the festive season may be here yet again, but of course, due to this little pandemic, you might have heard of it, COVID-19, this time it won't be business as usual for many players in the hospitality sector. Some hotels in Kenya are seeing an increase in business, and that's given them a bit of hope ahead of the new year. CGTN's Nick Mudimba filed this report.
The Sawela Lodge, an increasingly popular holiday destination in Naivasha, Kenya, where signs depicting the festive season welcome visitors upon arrival. It's clear that business here is slowly getting back to normal as more guests check in. The hotel's management has been pleasantly surprised by the increase in visitor numbers, but it insists that observing the Ministry of Health guidelines remains their top priority.
As we prepare for festive period, we have put in place measures which will actually safeguard all our guests staying with us against the COVID-19 pandemic. We have also been certified by public health, and I must say we are doing pretty well in terms of the measures we've put in place.
The expanded dining area captures the surge in the number of guests. The chefs are also busy preparing delicacies specially ordered.
Compared to other years, this year, from the time we reopened from the COVID-19, business has been booming for some time, and we've actually been operating at occupancy levels of more than 65%. So surprisingly as well, for the meeting rooms, they are all fully booked.
The rooms have to be well maintained to ensure they meet all the required health standards.
Before we reopened, we actually brought in staff members and did some training on the COVID, which was actually conducted by the Public Health Office based in Naivasha. They actually gave us guidelines. Everybody was trained and they know how to handle themselves during this pandemic.
2020 has been a difficult year for many Kenyans, and the festive season has actually offered an avenue to unwind. Hotels here are actually booked at 90% capacity, something that many didn't expect, but it's all about the mind, relaxing, hoping that 2021 will actually offer a good platform and a softer landing for so many who've seen the COVID-19 drought in 2020. Nick Mudimba, CGTN, Naivasha, Kenya.
You're watching Global Business. Time for another break. Here's what's coming up next. The European Commission is recommending a travel ban on the United Kingdom. We'll have the latest. And Italy is imposing new restrictions to prevent a surge in COVID-19 cases. All that and plenty more coming up next.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are these stories that need to be told. Africa Live. Find your voice.
Welcome back to the program. These are some of the stories that are making your headlines at this hour. Starting in South Africa, the country's made a $19 million down payment for the World Health Organization's COVAX program after missing that payment more than once. Now, that down payment is 15% of what's needed to secure vaccines for at least 10% of the population. That equates to roughly 6 million people. South Africa's membership in the facility ensures that it does receive its equitable share of the vaccines under the COVAX facility once they are available. The security situation in northern Nigeria appears to be worsening, with bandits increasingly targeting school children. 48 hours after the release of 344 schoolboys kidnapped by bandits from a boarding school in northwestern Katsina State, gunmen have abducted another 80. The children were returning home after attending a religious ceremony. The school children have since been rescued by security agents and local vigilantes as well. In East Africa, Kenyan doctors have joined clinical officers and nurses in a nationwide strike. Doctors called for this strike after talks with the government regarding pay and coronavirus protective gear broke down. The strike had been due to start on the 7th of December. It was postponed for 2 weeks to give more time for talks with the authorities. At least 14 doctors so far have died of coronavirus in Kenya since the first case showed up on the 13th of March. And finally, the first direct commercial flight from Israel to the Kingdom of Morocco took to the skies on Tuesday. This comes less than 2 weeks after these two countries announced that they were establishing formal diplomatic ties. Morocco is one of 4 Arab nations this year to normalize ties with Israel under U.S. brokered deals. In return, the U.S. fulfilled a decades-old goal of Morocco by backing its contested sovereignty in Western Sahara. That's a run through your headlines. Away from the continent, the European Commission has recommended that all 27 EU member states impose travel bans to and from the UK over a highly infectious new strain of COVID called B117, which was identified over there. Here's CGTN's Andrew Wilson with the details from Oxford.
The government has 3 different battles to fight at the moment. One is domestic in terms of whether it should change the arrangements and pandemic laws concerning the spread of this new variant inside the country, Also dealing with Brussels, because the European Union is now considering a united travel front decision over the next couple of days about what it advises member states to do regarding travel in and out of the United Kingdom. But the main priority at the moment is to clear this backlog of lorries that I'm sure everyone has seen now on the television pictures at the port of Dover, the main and closest link to the continent through the country of France. Now, the Prime Minister yesterday spoke to President Emmanuel Macron of France to talk to him about arrangements they might make to free up this logjam. There are now thought to be about 1,500 trucks stuck on this side of the channel, many of them European lorry drivers trying to take either empty loads or full loads back to their own countries in time to spend Christmas with their families. So there's elements of frustration in that as well. And they're talking about trying to rush in perhaps a testing program at the port or nearby to allow these lorries to move. The good news is, as far as vaccines are concerned, or at least the ones they're using to tackle COVID-19, is that they are very easily tweaked. It's quite easy to take the makeup of a particular vaccine, like the Pfizer vaccine or the AstraZeneca Oxford vaccine, and tweak it slightly to adjust to any new mutant strains or variants that might come down the line. But what's most important is the work of this organiser NervTag now to identify the specific characteristics of this new strain that they've confirmed working here in the southeast of England and perhaps spreading already across the country.
Now then, the UK's gross domestic product grew by a record 16% in the third quarter. That's up from a previous estimate of 15.5%. Now, while that does reflect the country's economic recovery, it still does not make up for the 18.8% decline in the second quarter, when most of the economy was more or less shut down. Compared to the same quarter a year ago, the UK's economic output actually fell by 8.6%. According to official data, output in services, production and construction sectors went up by record amounts in Q3, but remained well below last year's levels. The Office for National Statistics also noted that the UK borrowed a record $320 billion in the first 8 months of the fiscal year, and it's estimated the country's deficit will hit close to 20% of GDP, or double that from the global financial crisis. Recent data from the World Trade Organization is showing that global merchandise trade in goods moving around the world, bounced back in the third quarter. It went up by over 11% compared with Q2 after falling by 12.7% in the second quarter. On a year-on-year basis, global trade in the third quarter was still 5% lower than it was in 2019. The volume of world merchandise trade for the first 3 quarters of this year is currently down 8% compared to the same period last year. This drop is smaller than the projected decline of 9% for the whole of 2020, the WTO's most recent trade forecast. Growth for the entire year will depend on whether the recent resurgence of COVID-19 in some economies around the world will take a toll on trade in the final quarter of the year. China's State Council Information Office has released a white paper on the sustainable development of transportation. That document was presented by senior officials in charge of air, rail and posts and the Vice Minister of Transportation.
China's transport industry has entered a golden period with high-quality development. The sustainable development of China's transportation industry is closely linked with the sustainable development of international society. In order to take an active role in global transport governance and to implement the United Nations 2030 agenda with the global community, China published this white paper.
China aims to become a global transportation powerhouse by 2035. The report says China will speed up construction of a smart public transport system, integrating 5G networks, big data, and a lot more machine learning. It also aims for a lot lower carbon emissions and more energy saving overall. The white paper comes amid an effort to make transportation environmentally sustainable. Well, they came to study at a top university, but many foreign students in the UK never quite expected how 2020 would pan out. Meetings have been limited, and now many face the prospect of a Christmas holiday far away from home. Here's CGTN's Guy Henderson with their story.
Evidently, Xiaoyun Zhang is planning a low-key Christmas. China is home, a 10-hour flight over 4,000 miles away. Some of Xiaoyun's Chinese friends made that journey in the summer and never returned. So this third-year maths and economics undergraduate has decided to stay in London for the holidays, and gladly.
I have the general exam, so I just prefer staying here and prepare. And especially the situation in here these days, you have to be in quarantine for quite a long time. So you probably don't really spend a lot of time with your family, even if you travel back anyway.
There's less traffic than normal during Zhao Yun's cycle to the library. The capital's ongoing coronavirus restrictions make sure of that. The London School of Economics is keeping some of its facilities open through the holidays this year. After all, more than half its student population is from overseas, so Zhao Yun is by no means alone.
Term doesn't end until mid-December, but most students are already heading home for Christmas. And many of them won't be coming back here until later than usual in the new year either, all in the name of trying to lower transmission levels. But there are still some people on this campus, those who this year won't be reunited with their family members.
Most of the 1.9 million UK students who've gone got tested first, giving them time to self-isolate if they had to and still not miss the big day. And for those who remain, extra help is at hand.
We have a group of a set of activity called Plan C that we're pushing out to our students. This includes like virtual events. There are a few in-person events as well that they can attend. We also have some care packages that are being made up, and we're sending these out to our students. We're being that friendly ear, but it's a really hard time for a lot of our students.
And Zhao Yun knows it may not get much easier when she graduates this summer.
I think it affects like job hunting in here as well. So I think a lot of people think this is a harder year for finding graduate jobs and internships than compared to previous years.
So a working holiday it is for a student who's had a year like no other, but is determined to remain upbeat. Guy Henderson, CGTN, London.
New restrictions have come into effect right across Italy as part of a national plan to prevent a surge in coronavirus cases. From Monday, travel between the regions is banned. There will be a 10-day lockdown over Christmas and a New Year. CGTN's Hermione Kitson has more details from the capital.
This year, Italy's countdown to Christmas is also a countdown to lockdown. Shoppers racing against time to buy gifts before the entire country becomes a red zone.
Personally, I agree. I even think they should have closed this last weekend to avoid the risk that people took with Christmas crowds.
For our health, it is better to sacrifice 10 days of freedom. What is important is that we are all well.
A national lockdown will be in place on key dates of the festive calendar between the 24th of January. A curfew of 10 p.m. will remain and shops, bars and restaurants will be closed. Business owners say it's another devastating blow.
We have losses of 80% for every month from September until now.
On the one hand, it is right, it is risky to leave everything open. But on the other hand, the workers affected who have families to feed, it destroys them.
Italians are doing what they can to make it home in time for Christmas, as movement between the regions will also be banned. Travel will only be permitted for work, healthcare or emergencies. Tourism operators say the closures were unexpected.
These Christmas holidays were very important for the tourism sector, but as we are not working at all, we want more financial support from the government.
The rate of contagion in Italy's second wave of infection is slowing down, but not fast enough, according to health authorities. The government says these new measures come amid serious concerns of a spike in cases over Christmas and a third wave of infection in January. Italy has also reported its first case of the new variant of the virus, a man who tested positive after a flight from the UK. The message from the health ministry is that the battle is far from over.
If we're not prudent now, we will have a new period, a difficult period after the beginning of January. So we recommend everyone to be prudent.
A Christmas of sacrifices in the hope of a healthier and happier 2021. Hermione Kitson, CGTN, Rome.
January, just before the pandemic caused shutdowns around the world, working women in the US had hit a very important milestone. American women outnumbered men in the US labor force for just the second time in history. The last time that happened, it was World War II. But months later, those gains were derailed by the pandemic as women were forced to take on even more childcare duties than normal and that has disrupted the careers of millions. CGTN's Karina Huber takes up the story.
Rachel Silverman is a mother to 2 young children. She's also the owner of her own genealogy business specializing in Jewish family history. She started her
I was temping while I was working with clients to try to make ends meet, and then when I finally got a client roster built up, I was able to stop temping, and I've been on it, been doing that ever since.
Her growing family has come to depend on that extra income. But record unemployment triggered by pandemic shutdowns has caused her client roster to dry up.
My service industry is also sort of a luxury industry where if people don't have the extra income to spend, then there are no clients.
In normal times, she gets up to 6 inquiries a month. Since the pandemic shut things down in March, she's had a total of 5. That's less than 1 a month.
The pandemic has derailed the careers of millions of Americans, women and men. Many have lost their jobs, while others have seen their pay and hours reduced. But research shows it is women's careers that will disproportionately be impacted, in part because of childcare gaps caused by school closures.
Unlike previous recessions, this was also a care crisis, right? When daycares closed and schools started closing in March, there was a panic, like, how are we going to cope?
How many families have coped is by relying more on mom. In normal times, mothers handle about 70% of the childcare at home. The burden has exploded amid the pandemic. Scarborough is the co-author of a report that concludes since the shutdowns in March, mothers with children under the age of 13 have reduced their work hours 4 to 5 times more than fathers. He says this could have long-term consequences.
It might seem as though mothers aren't meeting their work responsibilities to the same extent as their male colleagues. And then that can have a further exacerbating effect on future decisions around promotions or raises or these kind of things.
For families that depend on dual incomes, the loss of a job can have a dramatic impact. Silverman says her family's savings have been drained, and dreams of buying a home or sending a child to a preschool program for 2-year-olds have been dashed. Her identity has also taken a hit.
I feel like I'm not even myself. Like, I don't know who I am without an opportunity to sort of self-actualize in this passion and business that I've built up.
Scarborough says employers need to recognize the extraordinary pressure mothers are under to juggle it all amid the pandemic and enact more family-friendly policies. Karina Huber, CGTN, New York.
Face masks amidst this pandemic have become an everyday accessory for many around the world. You can't really step without them. In Mexico, one indigenous group is making the most out of a challenging time. CGTN's Alistair Baverstock has a story on what's hot tonight.
The high Sierras of eastern Mexico, where people still maintain pre-Hispanic traditions. Here, people still speak Nahuatl, the language of the Aztecs, and when it comes to clothing, the traditional embroidery never goes out of fashion.
Pues aquí nosotros hacemos el bordado.
Our embroidery is based on nature, and when I wear it, I can identify with the place I'm from.
These painstakingly hand-embroidered designs take hours and hours to create, and while they are typical of this region of northeast Puebla state, they are highly prized in markets not only across Mexico, but also the world. In the face of the COVID-19 pandemic, income from international visitors has disappeared. One businessman has found a way to adapt.
Fue por la necesidad de generar ingresos.
We needed to earn money. As we say here in Mexico, we dance to the song that is played.
Pongan, nosotros bailamos.
With face masks now an integral part of a person's everyday wardrobe, Martin began transferring his designs, normally reserved for formal wear. His business has done better than it ever did before the health crisis.
Actualmente hemos elaborado más de 100,000.
So far, we have made more than 100,000 artisanal face masks, which have been sold not only in Mexico, but also been exported to France, Spain, Switzerland, and the US, where we have many distributors. We're having to rethink our production strategy as a result of the pandemic, to think in new ways, because otherwise our business would have failed.
The brand now even offers matching shirt and face mask sets. Gregorio Mendes is a nationally renowned artist from this region. He says his traditional art helps spread local culture around the world.
It's a great joy because it makes us feel that we are part of the wider world. We are sharing our own perception of life, how we see the harmony of nature, the ways we can enjoy it, but also inviting the rest of the world to take the same pleasure in it.
Alastair Baverstock, CGTN, Quetzalán, Mexico.
Quick updates on commodity prices. Platinum has headed south in today's trading session, down at least 0.9% at 1711 GMT. Brent following a roughly similar trajectory, 1.12% lower at the same time, $50.34 a barrel. Now, in part, that's being fueled by the jitters we're seeing around the effect this new COVID-19 strain B117 will have on effective demand for fuel both in the short term and deeper in 2021, as vaccine access, at least for now, is still pretty constrained. Here's what's coming up next. We'll be in Cote d'Ivoire for the final part of Global Business, looking at a company that's set up Black Dolls to help African children be proud of their identity.
The greatest journeys, the greatest sights, the greatest adventures.
Here in Canada, this weir allows the locals to walk on water.
We're far more than just TV news. We're your passport to the wonders of Africa.
To bring you stories of struggle, survival and hope.
So let's explore. CGTN. See the difference.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
Welcome back to the program. Frustrated by seeing store shelves in Cote d'Ivoire lined with almost exclusively light-skinned dolls, Sarah Koulibaly decided to launch black alternatives so African children can find their own identity in play and be proud of their skin color. It's proved to be a clever business move as well, as she says demand is soaring and supply is still pretty short. CGTN's Beryl Oro has that story on Grassroots.
'Tis the season, and preschool children in Jacqueville, Cote d'Ivoire line up to get their Christmas gift from Santa Claus. Until now, dolls would be fair-skinned and dressed in Western clothes. But this year, Naima Dolls is breaking the mold.
We have already seen in other sectors like cosmetics or hair products how the claim of an identity can change the course of the market. We have seen it. So when African women started to complain about the fact that their skin color did not exist in the cosmetic industry, there was a total revolution in that market.
Naima Dolls was launched 5 years ago to fill a gap in the toy market, and demand for black dolls following African fashion is high and growing.
We do not produce enough dolls relative to demand. That is why we want our own factory. That is what justifies that decision. Because today we are convinced that Well, we can see, by producing abroad, we can see how quickly we run out of stock, how much demand there is for the product, and so to get to the levels where we can satisfy, because there's nothing worse than creating a need and not being able to satisfy it.
I like everything that makes up the African woman. I like the materials, the traditional African materials worn by women across Africa. We got used to white people's dolls, and now we can see. Now we see black skin, the African woman.
She aims to mass-produce the dolls first for the market in Côte d'Ivoire, then Sub-Saharan Africa, and eventually the rest of the world.
What we wish for today is to give children, the future generation, the weapons that will allow them to make the right choices. I just want for the African children to become conscious of the fact that they can also say, I'm beautiful, my culture is beautiful, my identity is rich.
For the moment, the dolls are designed at home in Koulibaly's Abidjan studio, then produced in China and Spain. They are then dressed, prepared and boxed by more than 20 women at Naima Dolls and then distributed for sale countrywide.
My first wish was to see my product grow commercially. But when it comes to the way the product is used, yes, of course, it is that we can accept ourselves as we are, and beyond that, the fact that others can also accept us as we are.
The company makes 32 different products. Out of these, 6 cost just over $18, with the most popular doll called Ajoba showcasing plump features, a celebration of African beauty and culture. Beryl Oro, CGTN.
A few notes as far as currencies are concerned as we wrap up the program. The South African rand is essentially trying to cling on to some of the gains we've seen in the second half of the year, 1468. But it's essentially been derailed, if you will, by resurgence of these COVID-19 cases and, of course, the emergence of that new strain B117 as well. On the bond side of things in East Africa, there are 2 notes you can look forward to coming to the market next month. There's a 2-year 25 billion shilling note that's roughly $222 odd million that will be auctioned on the 6th of January. Then 2 weeks thereafter, on the 20th, 50 billion shilling, that's roughly $450 or so million in an infrastructure bond, a 16-year note, will be coming to the market as well. That's it for this edition of Global Business Africa. Remember, we'd like to hear your thoughts on the content you've seen on the program in the last hour. There are many ways to get your thoughts back to us, all of them on your screens right now. I'm Ramah Nyang in the Kenyan capital, Nairobi. Thank you for your company in the last hour. The World Today is up next from Washington, D.C.